What's up, traders? It's Robert Falco here from Real Life Trading. Dan Janson and me are bringing you another edition of the Real Life Earnings Report. Let's get into it. Dan, good evening. How are you doing?
Doing well, Robert. Glad to be back after our little hiatus. But now we're ready to roll back into earnings season. 6th episode we're releasing. I'm super excited, super pumped.
Yeah, Q3 earnings is finally upon us. I know that everyone has been super busy with the election coming up and wondering whether or not there's going to be stimulus out there, but we do actually have some earnings to report on. So we're going to talk about Netflix and Snapchat today. Which one do you want to start with?
Let's give it a whirl with the Netflix.
All right, let's pull up this beautiful presentation here. Looks like someone took a lot of time on this PowerPoint slide. Yeah, I think
third graders got out early and they decided to put together Excel spreadsheets.
Yeah, some finance person, first of all, did this for Netflix, and I mean, the very first sentence. I mean, if you were an algorithm, are you buying or selling on this very first sentence?
Jim Cramer would say, sell, sell, sell.
Yeah, and that's what they did. So, fellow shareholders, as we expected, growth has slowed with 2.2 million paid net ads in Q3 versus 6.8 million. For a growth company, I mean, literally like 6 words in to say the words slowed. I just not great for that, because they do have some really good stuff in here. But when you read this headline, and that's obviously the first headline that comes out, that makes it look pretty bad. So they did have some slowing growth in users, although they had a big spike in users in Q1, Q2, just because of coronavirus and people staying at home. But they still have some good numbers in here. What were your thoughts?
Yeah, I think we're looking at a growth. Every growth company eventually matures. This might be at least one spot until they start breaking out new innovation, new ways to really attract new people. But here it's all about the number of paid users, the paid members they call them, that subscribe. What we were looking at as we were briefly going through the documents is, I mean, we had a huge spike due to everybody's work shutting down, everybody staying at home, everybody finding something to do. They're already paid members.
Mm-hmm.
How big is the pond that you're fishing in? And it is pretty huge, and there is definitely more opportunity, more revenue, but there's going to be a certain point where you start plateauing.
Yeah, and you can really see that like in the regional breakdown. We'll get back to their overalls, but if you look at the regional breakdown, this is the US. So you can see right here, Q4 of 19 at 0.55. And then you got 2.3, big spike, 2.94, and then 0.18. Europe, tremendous slowing in Europe. Got as high as 6.96. I think Europe had some of the more draconian, I guess would be the word that I would use, lockdowns and things like that. And then down to 2.75 and then 0.76. Pretty good ads in Latin America, and then a little bit of a slowing there. And then if we go down to, let me delete those, clear those drawings out. If we go down to Asia Pacific, we have 1.75, spiked 3.6, 2.6, and then at 1.0. So they added so many throughout the first and second quarter, and we can see in just their overall numbers right in here that they added 28.1 million paid memberships in the first 9 months of 2020, and that's more than they added in all of 2019. But then saying that they're gonna have that slowing down into Q4 is what I think the headlines and some of those algorithms took a look at.
Yeah, I think, and there's a certain point, I don't think we're at it yet. Even a lot of the new content being released to Netflix, some of it has been really good content. Cobra Kai, huge cult following behind it. A couple other just massive must-see hits that they've released. A lot of them have been recorded prior to coronavirus. So usually just the process of making a film, you make it and then it just sits in the editing room for a year, 2 years, whatever it is, until it gets released. So the same type here. They had a nice funnel prior to a lot of the filming get shut down. What I would wonder is Lucifer is another one you just kind of pulled up on the screen. So Lucifer is one that they purchased from a network, and now it was discontinued from the network, and Netflix grew the following that actually wasn't there when it was live on TV, and now they're able to just make new seasons and just continue the story a little bit. So just by doing things like that, it's working for them. I do wonder in when there's a certain point where, because of all the filming that didn't happen during 2020, when that actually catches up to the actual how much new content is coming on, and where their pivot is to survive until and it looks like at least internationally they've been looking to start or they've started production and stuff like that as well. So we'll see how that progresses, but it's just an interesting note where what happens when the content gets stale.
Yeah, what happens when some of that funnel runs dry? But I think you mentioned before we started recording, they got like 10 years worth of Adam Sandler movies, right?
Yeah, Adam Sandler's still pumping out new movies even in Corona pandemic, so he's immune.
Yeah, they started to do more partnerships, especially in India. So they mentioned that in their earnings, and India's largest mobile operator, where in Q3 they launched a bundle that it looks like bundles with mobile and fiber broadband plans. So kind of similar to how like Disney had partnered with Verizon here in the States. It looks like in India, Netflix partnered with some mobile and broadband. So that looks pretty cool. And then they are facing some competition. They mentioned that in here with Comcast, HBO, Disney Plus. Not specifically Roku from a standpoint of producing content, but we know Roku is another pipeline. But the other thing that I thought is pretty interesting, video games and user generated content from YouTube and TikTok are all vying for customers' attention. So that's pretty interesting as well. You can see that just them putting that in this earnings release shows that it's not just other curated content, but actual just people only have so much time to dedicate to things, whether it's video games or watching YouTube or TikTok.
Yeah, and the one thing, out of all of the ones that are mentioned, like Comcast, Peacock, yeah, they'll have some good shows and things like that. The one big one, I think we just heard an announcement. I don't know if it was last week or the one prior or something like that, but Disney Plus was only relatively 2% of their revenue, something like that, and now their Disney has come out saying that they're actually going to make a big push, big focus. They see the value in the streaming content.
Yeah.
And that the amount of content that Disney owns and can quickly, easily push up and start creating some kind of buzz around, something like that could hurt Netflix, especially if Netflix starts slowing on new content. I mean, once people have seen it once, do they really want to pay the extra, whatever it is, $10, $13 a month for stuff that they've already seen? Or would they go, hey, I haven't seen that new Thor movie in a while. Let me switch to Disney, see what they have. So Disney is going to be I think a strong competition for Netflix. I think Netflix should be a little worried about the competition and what advantages besides just brand recognition, but you run into Disney that has a probably even bigger, strong branding than even Netflix does. So that could be maybe not year one, but a couple years down the road, I see that could be a potential issue.
Yeah, and as you mentioned earlier, just a little bit of maturing in their business cycle. They're actually starting to have net positive free cash flow. Now they mentioned 1.3 billion versus 500 million negative in the prior year period. That some of this might have came from production not happening during coronavirus, because it does say as productions increasingly restart, they expect Q4 20 free cash flow to be slightly negative, and therefore for the full year they forecast free cash flow to be approximately 2 billion. So that is up from quote unquote break even to positive, kind of vague guidance there, but they do expect it to be positive. but they expect it to be negative in Q4, which will bring this total number down year to date as they start to invest back more into content. So definitely some good things, but I do think they need some new public relations people, or like not give this to the finance, let someone else type it, because the algos just totally hit this thing. I mean, you can see as soon as this earnings release was out there, again, these upper wicks are all not real. These are like delayed prints and such, but as soon as this number was released, I mean, just got hammered after hours. It is gapping, down into, I think the 100 is down here. Yeah, the 100 simple on the dailies at 489. So, yep, we actually went right to the 100.
The one thing I was really looking for and hoping to see was the retention rate in the Netflix report. They glanced over it a little bit, which is very, very kind of interesting that they did that. They had as people are starting to get back to work, companies are opening up. I would like to see an exact number of how many people that didn't sign up are still holding their memberships.
Yeah, they didn't
They
actually
just said
give us the numbers on that.
it remains healthy and engagement per member household was up solid. But and then they had the whole controversy with the Cuties movie that came out where there's kids, and
Mm-hmm.
I know there was a big thing going around social media with people canceling their Netflix because of it and the whole thing. So I was kind of curious to look at the actual number of how many people were, like, what the actual retention rate is. That they didn't show. It was just kind of glanced over and glazed over. So
Yep.
we'll see. We'll see, because I mean, half the battle is getting new people to sign up, and the other half is to keep them.
Yeah,
So
exactly. Yeah, I didn't see that in here either. We looked through, and we didn't really see that information. So they said it remains healthy, but what does that mean? I mean, is that like a 60% churn rate? 20? I mean, who knows? They didn't really put any quantifiable metrics around that. So if we go over to the chart, gapping down to the 100, what do you think about Netflix down here around the 100 simple?
I think with Netflix, it was a growth stock. Uh, People all wanted the Corona play of, hey, I think everyone's signing for Netflix. Um, I think in general, Netflix price is kind of high. Personally, um, I think it's a strong company. I think it's not going anywhere in 10 years. I don't think you have to worry about it going to zero. Um, I think we do have the increased competition coming in, and a couple of the factors that we talked about as far as production and new material and um, how they kind of ride the waves a little bit. But I think it could potentially come down a little bit further, and then possibly look for some kind of places to look to buy. It did, I think, as of the last time I looked at it, it was below the 495. Yep, it's 494.90
Yep.
right now post market. I think that 495 is a little bit of a key level, and then probably getting closer to that 485 level is an area that I think some people might look to buy it, but I'd piece into it. I wouldn't get in. I don't know if the value is as strong even at 485 as it was at 370.
Yeah, I think tomorrow, as far as day trade wise, I think I would look for some type of washout through the 100 simple intraday, maybe through this pre-market low, and then maybe look to fade it bullish for a day trade. But as far as
Right.
like adding shares, I think I'd let it come down into this area, this like 460 zone, and then maybe
Right.
even 435 as a potential. But I don't know that I would just be rushing in because, like you said, they do have some controversies. And then if their growth is slowing, that's going to spook some of the growth investors that are out there. Let's swing over to Snapchat. So on the other hand, Snapchat, I mean, for the first sentence here definitely engages me, and you can see the algos definitely liked it when they immediately saw that first headline here on Snapchat was daily active users increased 18% year over year to 250 million, 249 million. I rounded up, and then revenue increase of 52% year over year, 679 million. That's pretty strong.
Yeah. Yeah. they figured out how to finally monetize the users. That was one of the biggest struggles Snapchat had. Is, I mean, it started out as you take a picture, you send it to somebody, it deletes. You send a message, it deletes. Kind of self-destructing texting, and then you can't go back and see what the other person said 5 days later. Um, and they were struggling to bring in figure out how to make revenue. Then they went the route of trying to get some apparel and some sunglasses that you could take pictures with, and that links up to your phone, which is a ton of money they spent to try to invest in the technology. It just never took off. But a way of that they started doing it, and probably about 2 years ago, I've been bullish on Snapchat, mainly. Even it's almost like a Facebook play back in the day where they weren't making any money, but they had the users there. The users, and it shows here that the users are increasing their activity, and more users are coming into it. Younger kids, millennials, really anybody with a new iPhone, they are using Snapchat as text message. So they're communicating instead of just the old text message. It's easier to send videos, send photos, put a cool little filter on it that just excites people for some reason, and it's more of a um, new way of texting somebody. And then a lot of what they've started to implement is kind of add some stories, add some advertising, just some different content where you just see what's going on in the world just by clicking on a certain area of a map. So just a lot of, and I think they call it the Discover, which I've read somewhere in the article, like India's using it like crazy. It's up like 40% in India for whatever
Mm-hmm.
reason. And just being able to deliver new experiences. Here's a Conor McGregor fight, but even last year when football was happening, where fans could go to the stadium, you could click on it and see different people's point of view from inside the stadium. So there's a lot of cool technology in it. And for me, I wasn't so worried about the user base, because that's there, and it's just a way to capitalize on it. And I think with the ads and sticking them in between stories and stuff like that, it's they've solidly been able to figure out how, and a lot of that revenue that's going to take is coming from Facebook and coming from a lot of the other, I guess it would be called at this point the dinosaurs of social media that have just been around for a while and people know what to expect. So I still like Snapchat. It after hours started to skyrocket a bit. So I think if you're in it, great. But I do own shares from a lower, much lower point, so I'm not adding on. But
Yeah, it sounds like you are
I'll
a
definitely hold it.
heavy active user of Snapchat. I had no idea that they had all that stuff. The UI for me, maybe I'm just old. I mean, I'm 37. My girlfriend's kids say that I'm a boomer. So maybe I just do not get it. But the numbers look good to me. I'm not as familiar with using it, but they definitely have lots of partnerships. You can see they're partnering with brands. And so they're obviously finding a way to monetize it. As you said, they have some big names in here, like Conor McGregor, um, Jaden Smith. I think that's Will Smith's son. Looks like Kevin Hart. He's one of the highest paid actors in Hollywood, comedians out there. So they got, I think I saw The Rock in here somewhere.
Yeah,
Uh,
Dwayne the Rock is in there.
yeah.
That was
So,
actually either this one or that was in that was Netflix, I think.
oh, was it? Okay.
Yeah,
So maybe they don't, they need to get The Rock. They'll
they need the Rock.
skyrocket to 50. So it looks good. I mean, I don't know that I'm buying, like you said, this is a massive gap, and especially gapping now. Tomorrow morning we are going to open above this all-time high over here from the IPO, and so it's a lot of bullish candles in a row, but this is a massive gap right now, all the way up at 35. I don't know if this gap ever fills. If it does, I think I'd be a buyer down here in the low 30s.
Yeah, I know there's people obviously wildly profitable in it at this point. I believe it's above the original IPO price that it came out with today's move after the
Mm-hmm.
post market. So there's a lot of things to like. Facebook is still a much larger platform, more users. Just it's been in the game forever, but I think there's a good sneaky little growth play. I do like it. That's what I said. Like even back from $8 to $12, I was picking up shares consistently, religiously, just because I think it was going to be a longer term hold. It actually moved a lot quicker than I thought it was going to, but anytime there's a dip in it, I think it's a good avenue just to kind of balance out the portfolio, put something in there. I don't see it being a whatever Facebook's at. What is it, $300 a share or something like that now, 250, something like that. But I don't know if we get there that quick. But as very similar, so Facebook came out, a lot of younger generation was using it, and then either one, the generation got older, or the parents started using it until it became uncool. Um, Snapchat, I think, has that little same bit of that base to kind of grow and get new users in. And TikTok is I mean, TikTok's not public, right? I don't think, because other companies are trying to buy it, and that would be great. But it's the same type of place TikTok is. Just that's the new cool platform, and Snapchat's kind of maturing to a point where it's almost investable from a hedge fund standpoint.
So are you gonna sell covered calls or sell your shares, or still holding these bad boys?
I'm still holding it. They're all my long term portfolio. I'm in it to win it. I'm just gonna let it keep doing its thing.
All right. So for a day trade tomorrow, it is up 23%. So for me, I have been known to try to fade some of these super big bullish moves. I would wait for potentially, it depends on how it opens. If it opens really strong and runs, I'm probably going to at least wait an hour, wait for some type of washout, a capitulation to the upside above like a 37, some type of round number, maybe 37.50, just depending. And then look for that 15-minute break and a retest, and then short it back down. Again, not for any massive, move or anything like that, but I think that's a little bit easier than trying to take it bullish in the morning, being up 23%, but we will see what happens. Long way to go until we open tomorrow. So that wraps it up for us this evening, but two big earnings plays, Netflix and Snapchat. Hope that helped y'all. Once again, I'm Robert Falco.
I'm Dan Janson. And don't forget, make sure if you're watching this on YouTube, hit the thumbs up button, ring the bell, and make sure you guys check out reallifetrading.com. Great place for online education, free. Still free, right, Robert Falco?
Yeah, I heard that it costs $0 to watch those videos.
I heard we had a 50% increase in pricing, but it's from zero, so it's still going to remain the same. Everything's free, so check out the website, see what we're looking at when we're trading, and then we'd love for you to check out some of the live trading as well, and join the team and trade with us live.
Awesome. Well, thanks so much, everyone. Love life, live life, trade it. We'll see y'all next time.